Okay, now today we will discuss on internal controls and processes.
Okay, sir.
Most important thing for an audit, internal will be internal controls and processes. So, see, one is bookkeeping, another is audit. Now, bookkeeping focus will be on preparation of financial statements. Which are the financial statements you prepare? Profit and loss account, balance sheet, and cash flow statements or any other statements that are required for company, corporate entity. Other statements may be required, whereas normally you will prepare only P&L account and balance sheet for financial statements. So that is that is a part of bookkeeping. You'll go with the journal entries, then ledgers, then preparation of financial statements. Coming to audit. Now, audit, if it is to be successful, most important thing is establishing internal controls and processes. Uh, can you give an example of internal control and processes? See, for example, a company wants to purchase some goods. Straight away, uh, purchase will happen. What and all processes will happen? What and all internal controls are there? Can accountant purchase imagine a big size company. One is small entities, another is big size companies. If you consider a small proprietor, he's the purchaser, he's the seller, he's the uh, cleaner. He will clean the shop, then he will purchase, he will sell, he will maintain accounts. He is one man army for a small scale trader, for a small grocery shop, something like that. Whereas for a big company, there will be internal controls, there will be what is that, processes. See, for example, just to purchase goods, accountant, can he purchase goods? Bhupesh,
No, sir.
Sagar?
No, sir.
Now suppose they want to purchase goods, what are the processes they follow? Any idea?
Sir, requirement quotation.
Requirement, quotation. Okay, because every company, there is no standardization of words, uh, because no standards are established for certain things. So
Yeah.
common practice, whatever words are used in different industries, different companies, they follow from time to time. They follow for decades or years. Now they'll raise a quotation, you told, then what you told, what word you use?
Requirements.
Requirements. So requirements, quotation, all that. Then who will raise the request? Who will raise the see, requirement is there, fine. Who will identify the requirement?
Means
Who will
in
identify the requirement?
in production line or anywhere.
Production line. Okay. Who will that person will identify the requirement. So production manager will tell. So suppose we are take the example of a manufacturing company. So production manager will tell this much raw material is required. Then what will happen? He will tell to whom? He will tell to accountant, or he will tell to sales manager.
Salesman.
Salesman. No, accountant, sir. Not salesman.
Sales manager is selling finished product of the company, है ना?
Sir.
Sales manager is selling the finished goods. Manufacturing company purchases raw materials. It will produce finished goods. It will manufacture finished goods. The finished goods are sold by sales manager, right?
Yes, sir.
Yes, sir.
Now, right now we are talking about purchase of goods
Yes.
or purchase of raw material. Now, production manager will tell sales manager?
No, sir.
No, no, no.
Will it tell an accountant?
Yeah, accountant or procurement team. Anything.
Now, will there be go down stores? where raw materials are kept. Raw materials are kept in
Yes.
company office only.
No, sir.
Raw materials are kept where? Imagine a big size company,
Godown or warehouse.
godown or warehouse. Now production manager wants raw material. Now raw material request will be sent to stores, that is warehouse or godown, right? Now godown, will it be in charge of sales manager, accountant, or production manager?
Accountant.
Godown will be in charge of stores manager. Accountant is for writing accounts, journal entries, ledgers, preparation of financial statements. That is the job of an accountant. Now stores, godown, warehouse is maintained by stores manager. Now production manager wants to manufacture finished goods. Now to manufacture finished goods, what is required is raw material. Now that raw material, he will ask, will send a request to stores manager. Stores manager will be in charge of stores, right? Godown, warehouse, all that. Now stores manager, what he will do? He will production manager called and asked to purchase. Stores manager will purchase. Hello.
Yes, sir.
See, stores manager is separate, purchase manager is separate. In
Yes,
big
sir.
companies, accountant is separate, sales manager is separate, production manager is separate, storehouse in charge is separate, purchase manager is separate. Now all this is a part of internal control, segregation of duties. One person should not do all the activities. It can result in errors, it can result in frauds. So for big companies, there will be proper installation of controls, internal controls. What are the internal controls? See, what is the difference between a small example? We took an example of a small scale grocery shop. That grocery shop fellow, he will be the accountant, he is the cashier, he is the purchaser, he is the seller, he is the cleaner, he is everything. One man army.
Yes, sir.
There is no segregation of duties, there is no internal controls. Internal controls, everything will come with a price, and it can be done at higher levels, corporate levels, or depending upon the size of the company. Now why internal controls are required? So that there is no collusion, there is no there are no errors, there are no frauds. Now suppose a big company, if all activities are done by one person, can one single person do everything?
No,
Even if
sir.
he works for 24 hours a day, not
Yes,
No.
possible. So one, it is not, any for any human being it is not possible. Two, it can result in collusion, errors, frauds, mismanagement, misappropriation, pilferage. It can be anything. So each activity is given to different people. That is called segregation of duties. This is a part of internal control. So sales is taken by sales manager, purchase is taken by purchase manager, accounts is handled by accountant, then stores is in charge of stores, production is in charge of production manager. Each activity will be headed by a different person altogether. Now in our example, the production manager wants to manufacture goods. For that he wants raw material. So raw material, he will he'll give a request to godown in charge, stores in charge, godown.
మీరు B block అంటే
Now the stores in charge, mute your mics. The stores in charge, what he will do? The stores in charge will tell if the goods are already in stock. He will not place a purchase request. He will just send the raw material to production manager. Hello.
Yes, sir.
Yeah. Okay. So mute your mics. Whenever you want to speak, you can speak. Now production manager will send the request. Stores manager, he will see whether stock is available with him. If it is available with him, he will send it as it is to production line. Suppose stock is not there with him, then he will place a request. He will place a request for purchase manager. please send this many quantity of raw material to us. To the now, based on the request of stores manager, purchase manager will prepare a purchase order. Will he prepare the purchase? He will prepare a purchase order. What is purchase order? To prepare purchase order, what are the factors that are considered? Who are the vendors available with us? Like who are the people who are selling raw material? Who are the vendors available with us? Whom we are in touch? What is the price they are charging? What are the other? What is the market price of offered by other competitors? See, we want raw material for production. Fine. The raw material is available with 10 people, 10 vendors. Now they will do analysis, quality, rate, price, all that. So if we purchase inferior quality, our finished product will get affected. If we purchase high quality, price cost of the production will increase and a product may not be saleable. So they will do all those calculation. What is the optimum decision that they will take? And purchase manager will prepare a purchase order saying that we will go with this particular vendor, will purchase raw material. Now that purchase order, that will be sanctioned by any other authority, higher authority, and goods will be purchased from, purchase request will be sent to that vendor. That vendor will raise a invoice. For the vendor, it is sales invoice. Whereas for the purchaser, for the entity, for the example which we are discussing, for this company, it is purchase invoice. So for the vendor, it is sales invoice. For our example, the entity, it is purchase invoice. So what we are talking about, the most important of all in audit is whether proper processes and internal controls are established. That we have to check. If proper processes and internal controls are established, then our audit process will be simple. Errors will be less. Frauds may not be there. So audit will be easier, and also it will help the company to survive. Many cases where proper internal controls are not placed, collusion is there, frauds are there. Many entities have shut down. Forget about making profits, they have completely shut down. Many a time they will think about many a time they'll think about saving some taxes or writing some accounts, not writing some accounts. Hard earned, what is that? Hard lessons they have learned. Many companies. So most of the companies, they will give preference for setting up proper internal controls, because proper internal controls are required to run an entity. If proper internal controls are there, it is not for the purpose of only audit. If proper internal controls are there, errors will not be there, fraud will not be there, collusion will not be there. So first in audit, whichever entity, whichever company we are going, first we have to see whether proper internal controls are there, proper processes are established. If proper internal controls are there, proper processes are established, then that means the company is safe. So in our example, we discussed segregation of duties. Here, are they segregated? Yes. Sales manager is separate, accountant is separate, production manager is separate, stores in charge is separate, purchase manager is separate. Purchase manager, once he prepares purchase order, higher authority will sanction that. And that sanctioning person will have a limit. For example, he can purchase to the extent of 25 lakhs. More than 25 lakhs, or suppose more than 25 lakhs or more than 1 crore, Another higher level authority is required to sanction the purchase order. So all that internal controls will be there, segregation of duties will be there. Then when purchase invoice comes in, goods come in, then accountant will make an entry saying that this much purchase invoice, we have received the goods, uh, purchase invoice, accountant will make the entry, journal entry will he'll make. Then goods will come to stores manager. The stores manager will make an entry in the stores ledger. Stores ledger will be there. So stores manager will make an entry in the stores ledger. Bin card will be there. There, wherein this much goods have come in. So entry in, that is purchased goods. Entry out, he will release to production line. So then he will release to production line. Then the production manager using those raw materials will manufacture goods. Proper segregation of duties will be there. Proper processes are established. Then company will be running smooth.